Today, folks, my favorite Canadian dividend stock has posted earnings, and we got to review where this company sits in the slew of interest payments and distressed layoffs going on in the telecommunication world. Because, yes, we're talking about Telus, baby, this wonderful telecommunication giant. And congrats to anybody that bought any of these dips. I mean, Bell was paying over 8% in its yield before rallying on Monday. I mean, the stock dropped on earnings and is starting to come back. Same with Enbridge. Like a lot of the oil companies that have been posted earnings doing very, very well today. But Bell, yeah, this was kind of like the leader of the telecom giants to first post earnings, and it just tanked, right? I mean, the stock was down, and then I was starting to recover a little bit after those earnings. So it's nice to see people are slowly accumulating, seeing some value here in that high yield. But man, we have got a long ways to go as the stock is down 30%. And again, the company's doing great. Fundamentally, everything's fine out of the higher interest payments and them trying to make up some of the difference by doing layoffs. These are what we still consider to be recovery plays. It's just people need to have utter patience to wait for the interest rate cut cycle to come around and hope they're taking advantage. This is an accumulation phase, right? But this stuff right now, guys, it's just not like tech, right? Like you're not buying these for tech-like returns, but I still believe that if you're buying them today, you're locking in absolutely absurd, like neck-breaking yields that we've never seen in the history of these companies. So your full rate of return comes from the dividend, and if you're looking for cash flow, you don't need to look any farther. These are conglomerates. These are massive companies. I mean, Telus is $34 billion in its market cap. Bell is $46 billion. These make up some of the top 20 largest companies in Canada, right? Like look no further and just cross your fingers and hope that when the interest rates, the cut cycle comes around, dividends are gonna, lock in at a great pace, and you're gonna start getting some capital appreciation. Because Telus here, they did increase the dividend. They continue to. They're sticking on their strategy. If we read into this, the directors declared a quarterly dividend of 37 cents per share on an issued and outstanding common share of the company's payable on April 1st, 2024 to holders of the record at the close of business on March 11, 2024. This quarterly dividend reflects an increase of 7.1% from the 0.3511 per share dividend declared 1 year earlier, and consistent with our multi-year dividend growth program. When a dividend payment date falls on a weekend or holiday, the payment shall be made on the next succeeding day. No, that is so irrelevant. Sorry, overreading into this, but it's really exciting, right? Because this at a time where the company continues, and they have a dividend plan to continue to increase it by 7% until 2025. So it's likely once they hit that milestone, I wouldn't be surprised if they pace back like many companies have been, considering, again, like I think this is the U.S. ticker, keep that in mind. But you look at this, never in the history outside of the 2008 financial crisis, and even then the yield didn't tick up as high as it is now at 6.35%. So astounding stuff. And again, keep in mind that we are in a new era where I think dividend increases are going to slow down. It seems like we have this inversion. Every time we head into a tougher economic cycle, the stocks get suppressed, meaning the yield goes up, yet the growth into the future goes down. So you kind of get the advantage today, but you're probably not going to see the same advantage into the future. It's a perplexing time unless you're in retirement, right? Because I wouldn't be throwing your money at these unless you're kind of focused more toward the retirement age and you want to build out income now and, kind of get to where you need to be in the next few years. Because if you want growth, obviously the S&P has still been the stellar place to excel these dividend companies, right? But still, let's break down Telus's earnings, get a full view of what's going on here. Because as mentioned, you dig into this a little bit, their net income is down. I mean, we're going to take a look at the annual 2023 from 1.7 billion to 867 billion. So a lot of people think like the dividends might be unjust here. It might be hard. Adjusted net income was still up to 1.3 billion versus 1.6. And again, you got to keep in mind they're doing a heavy amount of write-downs, and interest payments are going up. But I'm very confident they're having no issues with the dividend declared. But you can see their dividend was $1.45 versus the adjusted basic earnings of only 95 cents. But again, they're doing billions of dollars in write-downs right now. So you've got to do some research here, because I promise you these dividends are likely very affordable for companies like this. But when we take a look at the long-term debt, 27 billion is pretty astounding, considering it's up now by another $2 billion. Is that long-term debt? Yeah, I mean that's a lot of debt, man. That's going to be hindering some of that free cash flow, and they are still diluting. We're still seeing some basic weighted shares diluted here, which again is painful. This is something we talked about with Enbridge. When these companies are doing massive acquisitions and build outs, especially with telecom, with fiber and expanding the capabilities, it's coming at a pretty big cost to shareholders, not only from the debt standpoint and the interest payments, but from the share dilution that's hurting them. But if you read into it, they are still crushing it. That's why I love them. They're an industry-leading total mobile and fixed customer growth was 404,000, up from 103,000 over last year, and our strongest fourth quarter on record. They say this every quarter, driven by continued robust demand for our unmatched portfolio of bundled products and services. And let's talk about that. So, I mean, the mobile phone net additions, 126,000, the best fourth quarter since 2011. Robust fixed customer net addition of 75,000, including 36,000 internet customer additions powered by our leading product portfolio in combination with Telus's expansive pure fiber network, record high mobility and fixed customers. So just taking a look at that, just on a kind of a chart by chart basis here to make this a little bit more easy to see. This isn't like huge growth. We're setting records is great, but we're not setting records, by leaps and bounds. I mean, we're talking about growth of when we're talking about revenue and the bottom line here, about 5%, right, on mobile network revenue. We're talking about mobile equipment and service revenue. So this is probably more internet related, 7.4%. Fixed data services, 5.3%. We're talking about single digit growth here. But again, if you're looking for cash flow, if you're looking for income, this is great. This is continued growth against a backdrop of a horrible environment. The only thing really growing for this company, which you kind of got to applaud them here for, is the health services. I don't know what they're doing, but they grew health services by 86% year over year. On a full year, 1.7 billion versus 913. It really shows you the incredible dedication here. Now, the annoying thing is on a quarter over quarter over the holidays from 411 million to 432 million. It's not that big of an increase, but for the entirety of the year, I mean, what a jump. I'm curious to when it comes to telehealth, it's just mind-blowing to see the growth factor this is offering for the company. So something to definitely pay attention to, because it's nice that outside of many of the other telecom giants, they do have some insane double-digit growth going on in a sector that probably desperately needs it, especially considering some of the constraints in the healthcare sector here in Canada. So very intriguing to see some of that. But yeah, so total revenue though, all in all, can't really complain here. We're still growing, nothing by any insane levels, but still enough to be, single digits. No complaints for this kind of company considering the debt load they have. And let's talk about the debt load at $56 billion in assets against the total liabilities of $38 billion. This company, like most infrastructure, has more debt than I usually like to see, but you can kind of look past it considering they are a telecommunication giant, right? I mean, these companies are infrastructure based. They're like utility companies, but the interest expense grew by 49%. To $1.28 billion. So they surpassed the $1 billion in an interest expense, right? So they're getting crushed, in these financing costs, right? I mean, total financing costs, baby. I mean, this is just fine. I don't think it's total cost, just financing costs were up 100%. So it's just something to keep bearing in mind that this is a temporary problem that if it ever gets alleviated over the next 3 years and we slowly start pulling interest rates back to where the end of this year and the next year, that is when I think these companies are going to benefit. It's the bet that I have overall and something that I'm hoping plays out, because these aren't small companies, guys. Like I'd love to just crap on them and say they're garbage and incomparable to US companies. If you're a younger investor, by all metrics, you should really be focusing your portfolio on that aspect of the market, because that's what we do, right? Not that you should, it's not financial advice, but people like my parents that are in retirement, this is a dream. This is a dream if you need cash flow today. I mean, and it's good to dip your toe in and make it a small percentage of your portfolio, as we have as well. Like we have that Canadian exposure, and we should be probably picking up the dips, and I likely will before the Canadian bank earnings, because I think there's still some good value there. But if that's a conversation you'd appreciate, subscribe for those updates and always let me know what you think in that comment section below.